guys, my name is Bharti Seth, and in this video we'll be talking about accounting equations. This is the second part of it, and in the first part we have discussed about the basics of accounting equation and a simple question. Now in this video I'll be explaining you a bit advanced question. So let's start. This type of question will be coming in your exams. So here's the question. Anil is a sole proprietor. Anil had the following transactions in his business. So he commenced the business with cash 50,000. So we'll put the entry over here. So as is being in cash, so we'll write cash under assets, and we'll write 50,000 over here. And this cash is his capital, so we'll write 50,000 under capital's head. So here is 50,000, which is equal to 50,000 over here under capital's head. So we'll balance this, make a line and write over here the balance. And if you guys have not seen my accounting equations video part 1, do check it out. So here's second transaction. It's purchase goods for cash 20,000 and credit rupees 30,000. So we write over here purchase goods on cash and credit. So they're saying purchase goods on cash and credit. So firstly goods are coming, so we write over here stock, right? So for cash 20,000, which means we have to reduce 20,000 from here, and goods are coming for 20 plus 30,000, which is 50,000. So stock is being increased by 50,000, and as it is on credit, 30,000 are on credit, so it means that we have to give 30,000 to that person, our creditor. So that's our liability. So we'll write over here creditors under liability head, and 30,000 will increase from here, which means our liability is increasing with 30,000 rupees. Okay, so now we'll balance. $30,000 plus 50,000 is equals to 30,000 plus 50,000. So third transaction, this they're saying sold goods for cash 40,000, costing 30,000. The real cost price of the goods were 30,000, which we sold for 40,000, which means we earned profit of 10,000. So we write over here sold goods on profit. So 40,000 cash we are receiving, we'll add 40,000 over here, and we'll subtract 30,000 under stock, because we are selling the stock and it's going out from the business. Okay, so over here we earn 10,000 of profit, which we'll add under capital. The balance, it's 70,000 plus 20,000 equals to 30,000 plus 60,000. Okay, so now fourth transaction is rent outstanding 100 and salaries outstanding 1,000. So we write over here rent and salaries outstanding, which means we have to give rent, we have to pay rent in future. We were to give it now, but due to some reasons we couldn't give, so we'll give it in future. It is a liability, so we'll give an increase in liability. There's no cash or no assets, so we'll add, it's 1100, so we'll add 1100 under liability side, okay, and subtract 1100 under capital side, because it's outstanding and we have to give out of a capital in near future, okay. So we'll balance this becomes 0, and the balance remains same. It's 70,000 plus 20,000 is equals to 30,000 plus 60,000, okay. This becomes 0. Or you can also write over here like 30,000 plus 1100 and 60,000 minus 1100. We can write like that. So it will become 31,100 and this will be 59900. Okay. Sorry. 58900. So now fifth transaction. Bought refrigerator for personal use, 5,000. This 5,000 has been taken from the business cash, okay, but it is being used for personal use, so this will be considered as drawing. So bought refrigerator for personal use. Keep in mind to write for personal use for sure, okay. So this, it decreases our cash by 5,000 and decreases our capital by 5,000 as well, because it's drawing, okay. So balance 65,000 plus 20,000 is equals to 31,100 plus 53900. So now the sixth and the last transaction is interest on drawing, charged 500 and the interest on capital 1,000. What are drawings? Drawings means it decreases our capital. Why? Because the proprietor is withdrawing the cash for his personal use, okay. So business will charge interest on that drawings. So interest on drawing and interest on capital. So what is interest on capital? The proprietor is giving capital to the business, so for that the business will reward that proprietor with interest. Business will give interest on capital and business will charge interest on drawing. Keep this in mind. This point is very important and it can come in exams, so just listen. So both these entries will take place under capital side, okay. Interest on drawing will increase our capital and interest on capital will decrease our capital because we have to give, so it will decrease our capital, alright. So, and side by side, interest on drawing, here we'll give it, which will decrease our liability by 500, and interest on capital we have to give, and it will increase our liability by 1,000. So became 0. So we'll do a net balance over here. So will be 65,000, 20,000 here 31 100 and 53900, which is equal. We can see it. So it is 85,000 and 85,000 here as well. So now the question says use a counting equation to show the effect of the above transactions on his assets, liabilities and capitals. We have done this, and now it also says that you also have to show his balance sheet. First of all, just underline each and everything which is asked in the question. So now we'll make the balance sheet. So this is the format of the balance sheet. So we have to take the reference from our accounting equations. So we can see that first our assets are, we have two assets, one cash and one stock. So cash is 65,000 and stock is 20,000, as you can see. So there's no more assets, so now we'll come in the liabilities side, and in liabilities we have creditors. Look, remember, we our creditors were 30,000 and this was the amount which was outstanding, so it will come in outstanding expenses. So outstanding expenses, which will be 1100, and the creditors were 30,000, which together make 31,100, and here's the capital, which is 53,900. So it will always come equal. It will always be equal, and if it's not equal then your answer is wrong. Okay, so this was all, and now I have some questions for you, a small homework for you guys. Just write your answers in the comment section below. So here are 3 questions, and if you don't understand any of these, just do tell us in the comment section. I'll try to solve the problem. So first question is, if the capital of a business is 70,000 and liabilities are 40,000, you have to calculate the total assets. Then you have to calculate the total equity. You've been given the equity in beginning, your creditors equity, then your revenue and expenses. Okay, and you also have to find your owner's equity. So you just have to do the aggregate of these all, and for total equity you have to aggregate owner's equity, revenue, and you have to subtract expenses out of them, and then you will have to add equity of creditors. Just try it once. Okay, and this question is for you. On 31st March, the total assets and external liabilities were 1 lakh and 3,000 respectively. During the year, the proprietor had introduced additional capital of 10,000 and had withdrawn 6,000 for personal use. He made a profit of 10,000 during the year. You have to calculate the capital in the beginning of the year. Okay, 1st April 2012. Keep this in notice. Okay, so this was a homework for you, and if you like the video, please like, share with your friends and relatives, and subscribe my channel, and thank you.